Alright, what is up boys and girls, welcome back to another video on liquidity, supply and demand. Thank you very much for joining me. As always, please do drop a like, subscribe to the channel, etc. As we are talking again about the V-shaped recovery today, a strategy made famous by the trader Dodgy. Absolutely incredible guy, absolutely incredible mentor, who has been teaching me so much over the past 5 or 6 months that I've been watching his stuff, been checking out his live streams, etc. And the way that he trades has been absolutely incredible for me. I've had over an 80% win rate, and it's absolutely changed the game of how I've been trading, to be honest. Things have been going ridiculously well. Trading US 100 and also trading a bit of gold as well. Things have been going really well, as I've been saying. Trading the V-shaped recovery strategy. As you can see, already eyeballing this chart here, there's this big 5-minute V-shape here. That was an absolutely incredible trade that I took on Friday before the close, as you can see. So I'm just wanted to go over a few of the trades and the strategy and just generally give you some examples of how good this strategy is. It's really been, as I said, changing how I trade completely and how I think about the markets. And it has been really incredible in terms of win rate, over an 80% win rate with the strategy that I've been using. Really ridiculous stuff. So I just wanted to go over basically what this trading strategy is, and then I'll go and find some examples to show you what's going on in the market. So just taking a look here at the chart. So you've got your chart structure, you go like this. Basically what you're looking for, making this as simple as I possibly can, you're looking for a liquidity sweep of the low, followed by an inverted fair value gap back to the upside like this. This is your entry model. Very simple stuff. If you also are bouncing out of a big gap to the left as well, that would also really help things. And generally, if you've got a big fair value gap to the left on like the hourly or something that you're bouncing out of, that generally does also really help. But you can see you're looking for these big V shapes on the chart. So basically what you're looking for here is you've got your market structure, you come down, you get your liquidity sweep, you get your inverted fair value gap, and then you basically enter. Once you close above that inverted fair value gap like this, target a 1-for-1 for your first take profit, and then you'll have your runner take profits at liquidity points on the way up like this. Very simple stuff. And your stop loss is if we close back below this inverted fair value gap, that's where you would close the position. Very simple stuff. After a 1-to-1, you go break even, and then you let the rest run to break even or these extended take profits. And that's the model. Very simple. Very effective though. I've been having an absolute blast trading this because it's really easy to spot when you get those big obvious liquidity sweeps, that you get that inverted fair value gap back to the upside. More often than not, you do at least get to a 1R before the trade fails, or they just run all the way up. So I wanted to show you the one that I actually took yesterday. You can see on US 100 here, there is this very decent liquidity sweep that we saw with a bit of a data wick. A data wick that we saw, or a news wick, or whatever you want to call it, to either direction here, which kind of biased a little bit this liquidity sweep, but we came down again, as you can see. Let me put this on the 1 minute so you can see this more clearly. So the AM session for yesterday was pretty bad. You can see we got this big move to the downside, and we were looking for a bounce to the upside that we never got. We basically just came down and chopped the whole day, which was pretty crap. You can see we did come down and sweep quite a lot of liquidity out here, but basically we formed another swing low here that we could take out, didn't we? Which was from the AM session. And then the PM session here, as you can see, we've got those data wicks to either in either direction. And once you see those news wicks, you generally want to see one of them get swept and then trade the other direction. You can see we never got up to the top, but very obviously here we came down, we swept the liquidity of this wick down here. And then I was looking for these inverted fair value gaps so that I could trade to the upside. There was actually a 30-second inverted fair value gap down here that I could have taken, but I didn't actually take it because I was a little bit concerned that we were going to keep dropping. But we did get a nice recovery, and I don't ever really want to take the first inverted fair value gap back to the upside after you have this pretty significant volume and the pretty significant momentum to the downside. So I basically waited till around here. I'm just trying to think what time frame I was on that I took this trade. It might have been the 2 minute or the 3 minute. I think it might have been the 2 minute. Let me just have a quick look through these before. Or this 5 minute. Any of these would have done it. I think they're all pretty similar, to be honest. Let's just go with this 5 minute here. Actually, I don't think it was the 5 minute because it would have been invalid because I would have hit the internal swing high first. I think it was the 2 minute that I took. I'm just trying to remember because I was doing something else at the same time. I think it was this 2 minute. So you can see you've got a nice fair value gap here from here to here on the 2 minute time frame. Once we closed above, I'm obviously targeting a 1-for-1. I came up and got hit in the space of about 5 minutes. Then stop loss goes to break even. And then you're just targeting key swing points. I targeted this one here and this one, the all-time highs. We came up and smashed all-time highs on this. You can see this would have been an absolutely amazing trade, all the way up to all-time highs, and then we got a big rejection followed by a retest, and then we're kind of doing something weird today. But you can see how good this trade was. This was a bit less textbook, just because I did actually enter a small, very, very small runner long position at the low. Let me just get rid of all this again so you can see. Once I saw this reversal here, I wasn't sure, because there was no inverted fair value gaps. I actually entered a really small position that was long here. So obviously the bias at all-time highs is ridiculously long biased. Generally speaking, you are just going to come down, sweep liquidity, and go to all-time highs again, which is exactly what we did, by the way. So basically what I did was I entered a small long position down here on that 30-second entry that I was talking about earlier. And then I entered again just to average up into the 2 minute once I got the confirmed entry. So it worked out pretty well. It was a bit less conventional than how I usually trade, but it was really, really effective, as you can see. So overall, things have been going really, really well for me. That was my trade from yesterday. I did take a good trade on Friday as well. You come down here, look at this beautiful, beautiful 5 minute. Perfect trade. Let me take a look. Massive drop to the downside. You can see forming that V shape, swept out loads of liquidity all the way down to here. You can see all these levels of liquidity getting swept there. And then once you come back up, lovely, lovely fair value gap there. As you can see, looking for the 1-to-1 for our take profit. That got smashed in the space of about 10 minutes there. Go to break even, and then I was basically looking to target up towards some of these key liquidity levels. There's a bit of a key level here, as you can see. Equal highs was this, almost relative equal highs, and then I would have been targeting up here as well. But as you can see, because we ran out of time because it was the weekend closed pretty soon. Once we came up here and started doing this, I just closed the rest of the position. But you can see a really, really nice trade there. I would have taken half the position off here and then the rest of the position off here at a 4.4R or around that. Let's just call it a 4R for the other half of the position. So I'm looking at 3 or 4R. If I took half off at 1-to-1 and then the rest off at 4-to-1, looking at around 2 or 3 RR, which is absolutely incredible. Just another trade that I took recently with this ridiculously broken strategy. If you would like to learn more about this strategy, you can go down in the description and sign up for my Discord. I'll be doing signals and alerts for this if you're interested. And like and subscribe, get involved in the channel. There's nothing much to say apart from how good this is. You can see the potential. Every single one of these obvious V shapes on the market here. Look how many there are that you could have taken. And I'll catch you in the next one. Cheers.